What's up everyone, and welcome to Jayconomics. My name is Jay and it's a pleasure to meet all of you. On this channel, we take a look at anything related to finance with a strong focus on investing. So if that sounds like something you want to be a part of, then please consider subscribing and liking this video to help me on my quest to befriend the big, bad YouTube algorithm. Whoa. What in the world happened to Teladocstock and Livongo stock after their merger was announced? Over the following 3 days, Teladoc stock dropped 22% and Livongo stock dropped 19%. Livongo had just reported fantastic earnings too. So what does this all mean? Should you be scared of these telehealth stocks? Is it time to sell if you're up big on your position? Is it time to hold? Or is it time to buy the dip? We will cover this briefly and the telehealth space in general, and I will reveal the next Teladoc stock you can buy into early. And I quickly want to say that I really appreciate the overwhelming support after just 1 month on YouTube, so thank you all. Make that thumbs up turn blue and subscribe if you're new. It really helps the channel grow, and now without further ado, let's get into the video. Telehealth was already set to become the future of healthcare, but the illness situation has expedited that process and put things in fast forward. The whole industry is still in its infancy and will see massive growth in the coming years. Whoever is sleeping on this sector will be kicking themselves for missing out, in my opinion. Telehealth is the future of how our healthcare will be delivered. Doctors want more of it, patients want more of it, government wants more of it, and the market really wants more of it. Everybody wins here. And I don't often say this, but I just don't see a downside. Clearly, some investors have recognized this trend. It's pretty obvious when looking at the current US leader in telehealth, Teladoc, ticker symbol TDOC, and emerging powerhouse Livongo, ticker symbol LVGO. So let's take a look at the chart here for Teladoc. So while the market plummeted, Teladoc's business and share price soared. The industry as a whole was supposed to see somewhat of a hockey stick type growth, kind of like what Netflix experienced when streaming was still in its infancy. Then, a once in a 100-year event hit and has completely eliminated the flat part of the hockey stick. As social distancing continues to be the norm and as people start to get used to how easy, efficient, and convenient telehealth really is, the demand will grow more and more. Recent consumer and physician surveys show that 11% of US consumers reported using telehealth in 2019, as opposed to 76% now saying they were moderately or highly likely to use telehealth moving forward. In addition, virtual visits could potentially account for $250 billion, or about 20% of what Medicare, Medicaid, and commercial insurers spend on outpatient, office, and home health visits. Telehealth is to healthcare what streaming was to video rentals and what Amazon was to retail. In other words, it is the future. Right now is the perfect time for investors to get on board for the ride. With Teladoc and Livongo merging, they are in prime position to become a powerhouse in the US. Only 25% of their patients are crossover patients, meaning that each company will be able to leverage each other and keep growing. I think that either company on this dip is absolutely a buy. I see both of them as relatively safe growth stocks, in my opinion. However, I will not be investing in either, and that's because I'm even more bullish on the Canadian market. Virtual healthcare in Canada only accounts for 0.15% of the market, and the growth curve will be much steeper than in the US. As a growth investor, this is a golden opportunity to get in early. There are two main publicly traded companies in this space in Canada right now. One is wellhealthtechnologies, ticker symbol WELL on the TSX, and it also trades over the counter. I've been invested into WELL since May, and WELL has seen explosive growth since then, and especially in the past few weeks. As a result, I'm up over 50% on that position, and I expect this aggressive growth to continue for years to come. So yes, even after their recent run-up, no, I don't think it's too late to get into WELL. It is still a fantastic investment. But the company I want to focus on today is CloudMD. It trades on the TSX Venture and also over the counter for you non-Canadians. CloudMD is a fully integrated healthcare company, kind of like a hospital in the sky. CloudMD offers software as a service-based health technology solutions to medical clinics and healthcare providers across North America. They have developed their own technology that delivers quality healthcare through the combination of connected primary care clinics, telemedicine, and artificial intelligence. They run 5 brick-and-mortar clinics, but they also own their own EMR, electronic medical records, system that is used by over 3,000 doctors primarily in British Columbia and Ontario. CloudMD also has their own CloudMD app, which has over 100,000 registered patients already. CloudMD's mission is to create a patient ecosystem that makes it easier to provide patient-centric continuity of care. Now, if you're Canadian, you already know this. And if you're not, well, here it is. The Canadian healthcare system is broken. It's ridiculously slow, patient care is very subpar, and if you want any continuity with your treatment, forget about it. When it comes to chronic conditions, the Canadian system needs a massive makeover, and CloudMD is offering that solution. CloudMD has been making huge acquisitions as of late. On July 16th, CloudMD announced that it was acquiring 100% of the mental healthcare platform Snap Clarity. Mental health care is especially necessary right now as the illness is causing lots of mental health issues. A few weeks later, on July 28th, CloudMD announced that it had signed a definitive agreement to acquire South Surrey Medical Clinic. South Surrey services over 60,000 patients and already uses online booking, EMR software, and telemedicine that will be easily integrated into CloudMD's software and clinic network. Then on August 6th, CloudMD announced that it had entered into a binding agreement to acquire 100% of a US-based medical clinic in serving chronic care patients. This acquisition is only the beginning of their cross-border expansion into the US. The aim is to start providing comprehensive care for chronic and complex care patients in the US. These patients often have multiple concurrent diseases such as diabetes, hypertension, vascular, and heart disease. CloudMD is extremely undervalued right now compared to other players in the field and is poised for explosive growth. We'll get into some numbers in just a bit. But the story with this stock is very simple. CloudMD is literally the Canadian version of Teladoc Health, just at a much earlier stage in the growth curve. There are so many catalysts for this young company, and really, all that needs to happen to send this stock on a run is for institutional investors to wake up to the fact that this company actually exists. And that's starting to happen right now, with the company entering the province of Ontario, a province of 14.5 million people, over 1/3 of Canada's entire population. If you get in now, you'll be in front of the institutions on this one. In terms of revenue streams, the CloudMD app gives them high margin fees from doctors and specialists of all sorts like physiotherapists, massage therapists, and counselors. And remember, these people are revenue, not costs. They have their recurring monthly revenue from EMR, and they also have the pharmacy kiosk side of the business. CloudMD will partner with more than 150 pharmacies in 2020 alone who are afraid of losing prescription business to Amazon. Those pharmacies will pay CloudMD $500 every month for CloudMD kiosks to be in their pharmacies, where customers can pick up prescriptions from a doctor on demand. Pharmacies will want this service because it keeps the customer in the pharmacy for their prescription, not out to see a doctor and getting the prescription filled somewhere else. Pharmacies that don't see the writing on the wall will become the blockbusters of the industry and get left behind. CloudMD has been growing its recurring SaaS revenue by 30% year over year with its EMR system. SaaS revenue is highly lucrative. And consumer growth using the CloudMD app is growing even faster, and the illness will only help it grow even more rapidly. As mentioned earlier, CloudMD really is a full hospital in the sky. As a patient, CloudMD is very easy to use too. All you need to do is download the free CloudMD app and then schedule an appointment with a doctor. Oh, did I mention it is free of charge for the patient? That's because the Canadian government is trying to push telehealth and has partnered with CloudMD. For each appointment they get, CloudMD bills the government directly, just like every brick-and-mortar clinic in Canada does. CloudMD records 100% of the revenue and gets to keep 30% of the billing for every patient that is seen through telemedicine. The doctor gets the other 70% and doesn't have to deal with any headaches of commuting or running their own business. CloudMD can scale up the number of patients very quickly, and they are. When I look for big-time growth opportunities, I always look at scalability. CloudMD can scale quickly with minimal costs to do so. Profit margins are wide, and there is no cap on the number of customers that can be handled. When CloudMD goes from 1 doctor to 10 doctors to 100 doctors working at the same time, they don't have to build more clinics. They don't have to create more rooms for them or hire more staff. They just sign them on. That's it. We have to also entertain the possibility of a buyout, which, is of course in play here. And buyouts in this space are happening at very high valuations. Just a few months ago, Teladoc bought a company out of Quebec called InTouch for about $600 million US, at about 7.5 times revenue. Teladoc itself trades at more than 10 times revenue. CloudMD, in comparison, trades at 2.5 times revenue, less than a third of these. Meanwhile, the company is poised to grow revenues at a high double-digit rate for the foreseeable future. On top of all that, CloudMD's market cap right now is a measly $83 million. Teladoc's $15.75 billion. Yeah, enough said. I digress. Alright, so what am I doing? Well, if you haven't guessed by now, I'm super bullish on this sector and on this company. Currently, about 30% of my Canadian portfolio is in CloudMD and wellhealth. I think everybody wins with this system: patients, doctors, the medical system, society, and even investors. Of course, I think these stocks have the potential to make you a lot of money if you are bullish on the telehealth industry. I started a position in CloudMD last Monday and will be continuing to add to it. I hope you guys got some insight on CloudMD and the telehealth space in general. And guys, if this video brought you some value, then please make the like button turn blue. It really does help the channel a lot, and don't be shy to leave a comment below. Tell me if you're bullish on the telehealth sector. Are you currently invested into any of the companies we spoke of today? Are you interested in starting a position? Which telehealth stock is your favorite? And guys, if you want more content like this, I got plenty more coming your way, so subscribe and turn on that notification bell so you be notified anytime a video comes out. Alright, that wraps it up for today. Thank you all for watching until the end, and let's grow this community together. Until next time, take care and invest smart.